Okay. We're on AUH4. On the daily, let me just go back to the daily. On the daily, we have a SIBI, sellside imbalance, buy side inefficiency that occurred, and we have this lot, this low, and this high, and all the way across here we have a BISI, buy side imbalance, sell side inefficiency. And this is the high of this candle and the low of that candle. That makes that there. I didn't mark the top one to go all the way across. I only marked the bottom one right here. And we have this here. So this is and we have this low here taken out. As a swing is not necessarily, a swing, body wise, so that's why I'm not sure if this institutional order flow entry drill would be valid, with this low here being taken out over here and then a continuation down. I don't know if well, this one here took out all these lows here, so I just didn't see any in the instruction being so far away and fast. So we'll just see how this goes. So we can this here, the bottom right here, we drew out what's down below the targets. This is a weekly. This is out of the range of the video, I see. This is a weekly plus order block open. This is the open of that has a large wick, and the large wick was pressed all through the floor of this here. So this is this is only 7 pips off. I had checked it earlier. This is only 7 pips from striking it. So in essence, from a weekly chart, from the week, this is a weekly number here, this line here, and right here on the daily, it's this is 7 pips from there. So what's happening now? Let's just go. So basically, we have the first level. Okay, we have the stop hunt above these highs. We have a drop in a level 1 redistribution, level 2 redistribution, and this is where they make the really hard run down. And they just clear these lows, and then that's the initial close, and a lot of times they go lower, boom, and push down deep. And usually after the second level, it's thought that it kind of runs real quick. So I mean, it did hit it. So is it going to turn around and fully go up? Stands to be to look at. But with the idea that this institutional order flow entry deal may be about to play out for this week, mind you, this is a on the weekly. On the weekly, it's this candle is starting to form for this week. So there is nothing formed here that will show a weekly SIBI or institutional order flow entry drill, which it wouldn't be this big low. Just take these lows out here with this, and this here is a swing here, body wise. When this closes, it may be another strike up above there, and then run down. So basically creating a institutional order flow entry drill on the weekly could occur. So basically, that sounds like basically price can just consolidate this week and into next week. Not necessarily. It could spike up during NFP and then zoom down, and then zoom up and then zoom down a bit, and then come back in the middle. Basically, can make like a doji, something like this, and then do the institutional order flow entry drill. So let's just see now. Let me show you the setup that's coming up right now. So what I see now is we have, look at this, a very powerful 7,000 line. This is a strong institutional price level. We have this body, a good body candle. We have this one that in my mind I'm thinking to ignore. We have this bodied candle. We have this one in my mind I'm thinking to ignore. That makes 1, 2, 3, and it's making the 3 candle pattern. On the 4-hour, next this candle pops out and it's rising up. It didn't drop down yet. So now I dropped the line here, and we see that this is at 00, which is 5 o'clock. Today is Sunday. Of course, the market 5 o'clock in Australia. It's Monday. So this is right at the moment. It's 10:23 p.m. New York time. Okay, so let's try to make this fast, because my videos are becoming pretty long. So now I'm going to drop down to the H1, and I'm going to duplicate this, bring this to 3. Okay, because what we're trying to do is we're trying to encompass the 4-hour range. So that's 3, and now we can go to 5 minute, and just pull this over to 355. There. Okay, so this candle closes here. This is the close of that candle. So this is the range right here. So let's look for the significant swings. Where did everything start? It's staying all under here, and broke above here and took off. Okay. I would say this would be the last one before this is taken out here. These encompass. Okay, so what I'm looking at the break this level here. It finally broke above here, and this order block is not completely engulfed in it, but it's within there. And then we have these that come down still within here. This is marked this way. So technically, these are the last down close candles here. Okay, and basically just consolidate all here. And I'm thinking to just, because this even came down into it, to just to still use this. I'm just gonna still use the top of that one. Okay, so I'm gonna grab the fib, and I'll place it here, body, pull all the way up. There. Okay, so now let's look for structures here. Okay, okay, we have okay, right here we have, it's very small, but it is there. We have a small imbalance here. Came in a bit here. And I see this here. Whenever there's a candle that's engulfed by another candle, they say that that's a bullish sign, a sign of bullishness that's about to occur. See that happen there. See the close is above this candle here. And the low of this doesn't break through all that. Okay, so let me see, nothing there. We have another little gap here, imbalance here. So looking at this move here, we have a high, a low, a higher high. That makes this here a breaker. And its low did just get taken out. So now what we're doing now is trying to map out a measured move that will bring it to the down low. would be over. This is a this one may be ignored. ICT teaches to ignore this, so leave that. If it does get ignored, okay, so that valid. Once this is broken, this is, the breaker pop. So what we're looking for a turnaround. And I guess then I'm going to drop it on the these last two up close candles. I'm going to put it here. So just to show you what I'm talking about, I'm going to put it here. Usually you want the last up close on the selling. You want the last up close candle, which is this one, right before the break of the lows. So if I count this, then it will be this, and then we will pull it down till it turns around. And this is just a guess. That would be here, if it turns around off of this little imbalance here. It could turn around off of this candle itself. And pull back up into here. And strike. So I could see how this could be ignored. You would want a strike of the breaker, at least. But we'll see how things form. It's about 3 seconds before the next candle will form. Okay, it's 10:30 now. The new candle is formed. Starting. Now this one, I would expect it to create a fair value gap. Okay, I didn't want this to be so long, so let me just get this through. Let me see, it's actually not. It's not going to leave a gap. If it does at this point, it'll be really small. Nope, there we go. It's feeling it right now. And then it'll probably drop. So now I did test this. Here. 105 is the close. $106 is the high here. So far, I'm looking at the bottom where it shows the high. 70106. This low is close is 70105. And it's pressing higher. Let's see what it is now. Still high, 106. Now just note, if this is to be ignored, then this here would be a fair value gap from here to here. Which, if you count now, overall we're expecting it is a downtrend for the long haul. But right now, what we're looking at now is we're analyzing the place where price may turn around at on this side. So right now, if price treats this here, this low and this high here as a fair value gap, it would be the first fair value gap after this, you know, after this structure is broken, this swing low is broken. So price would come right up to it, right up to here. Probably pass it by 1 pip or a few pipettes because this is the 5-minute chart, and then turn around and drop. Open and the high is the same, 113. The high is 112. 1 pipette off. It is which would be an entry for the sell. Basically like an institutional order for entry drill on this side. But I've never seen one where this would be ignored and then you would treat that as an institutional order for entry drill. I will put the stop loss above the mean threshold of this here. Above here. So with the spread, you're talking about a little more than 5 pips. Don't necessarily have a target at the moment. Just on this fib pull, optimal trade entry is here, 79% is here, and we have this order block sitting right here. It is possible for it to return all the way down to here. I mean, heck, it is possible to return to, if I'm declaring this to be the origin, you know, the last order block before the break here, launching the start of this move, we can technically come all the way down here. But we have this price level here, and we have this order block here, but no really strong imbalances for fair value gaps, except for here. Time now is 10:36. The kill zone time for Asia is 7 p.m. New York time to 11, I believe. One of was it 10 or 11? Don't remember. So, all right. So what I want to do is stop talking. It's 18 minutes already. So what I'm looking for is a reversal pattern to happen in this area here. This structure, everything that's happening right now, I think I might want somebody here like this, and just have to wait and see where it turn around. If this candle doesn't break this low, it becomes a fractal, and that would bring this candle all the way up to this fib all the way up to here. That would make the consequent encroachment or the filling in of this be the optimal trade entry. So like there would be an entry. That's some honors. Let's try this. Actually, this here should be down a little bit more. And take off a little venture here. I put it to be. Where is the symmetrical sign, please? Let me get it out of the other one. There we go. Exactly there, and there we go. Symmetrical sign is here. So price coming down here. Yeah, that's what I would call for. Pips there and 4 pips there, 2-to-1 trade. Even though it could come all the way down here. Real quick before I leave, the high is 113, open also. And the high is 113. So it just came and tapped this to be exact, and turned around. So my order didn't get in up here. I'm still gonna leave it. I'm just gonna leave it. This is just a little disturbing to me. This one here, his low wasn't broken. A little worse for me, but I'm leaving it. Okay, and I will be placing a buy order. Now, here we go doing orders. I would have rather like sit here and watch it come down and make the formation, make the proper entry reversal signal that I like. Below the middle of that. There you go. And the check mark. Okay, so just keep in motion. This is for this here, and this, and this, and and basically we will be going up to the. This is the symmetrical screen here. So I will be going all the way up to B1 whole so that I got discounts. That mark, I think I forgot to pull. Did I forget to pull this is for me to know? Okay. So I would do it before, which would be, I would do it probably around here. So check this is the take profit. The second one there will be about here. Okay. So we are talking about middle of the X, how you do that, root on 11 pip stop loss and 40 pip take profit. All right, that's that. On 17, there we go. So now we finally peaked above here. I believe it's coming to the middle or all the way to this one here, or the mean threshold of these two candles. But ideally, I would like it to come to the consequently encroaching over the fair value of that even if you ignore this one here, which I believe my arrow should be underneath, should be in the buy side area of that. I mean sell side of it. I don't want it to turn around and leave me. So you come down a little bit below the middle. There you go, come on, a little more. Okay, so I'm going to push pause and turn the environment off, 26 minutes. Okay, the computer crashed. That was nice. So I'll have to try and yeah, that was I'll try to drill back down again. I get to 355, and I'm gonna do 5 minute, and I had to get to 355, and this had encompassed that 4-hour candle right now. And then I have put a sell order that did not get tripped. Oh, and I had put marked, I believe it's this one. And it basically did do an institutional order for entry trail right here. So ignoring this here, it's this low and this high, and it peaked up just a little bit above it and dropped. So my entry for the sell did not get tripped because I had it in the middle. I had a little bit below the middle, so my order did not get tripped. And price came to here and has created this little W here, and if it goes up, it has a chance to come and clear these relatively equal highs and come to the middle there. So I will drop down the sell order right here, and the stop loss was, let me push pause because somebody's in the kitchen. Okay, and I'm going to drop the right here, a little bit above the mean threshold. Okay, so yeah, I'll still leave that order there. And it was, what was the pull? The fib pull on this side was, maybe I came up here, right? Maybe I came here down to there. Okay. And the symmetrical zoom is there, and let's see. I believe I had put a, I think I grayed out this breaker. Also, I'm just leaving it so it can be a little cleaner. And I believe I put the fib pull on this side. I believe I put it over there. optimal trade entries here, and I'll put the order from this side. Okay, so from here to here, equilibrium is definitely broken through. But I sometimes I sometimes wonder whether or not I should be putting for a range measurement from equilibrium there. Let's see. So the equilibrium is as you see right here. This is around the place I wanted the figure to be. I mean the order to be. So we do know that there's a small little fair value gap here. So we have this order block, move up, down, creates that here and leaves off. There's some balance here and leaves off. So I'm just gonna clean this. Oops, is that the wrong one? Yeah, no, let's see. Okay. Alright, so I'm going to be putting a counter trend. This is a counter trend with the expectation of price coming up to try to hit that daily institutional order flow entry drill. And we're doing this on the 4-hour 3 candle pattern at occurred. So yeah, check sign if I gotta take profit for this. Out here and up arrow. A little bit above, so we'll take possible heat for it to come into here, but just in case we'll just put that there. Stop loss here, and I think I made it back. So 10 pips and up there was 40. All right. Now I am looking over here, low, high, low, higher low. This is a mitigation block, and as you see, mitigation blocks, price likes to sit on them sometimes, bounce around, launch off, and then it will return to the mitigation block. So these bodies of these candles, the mitigation block, that's the whole thing. It actually comes in deeper, so they actually can come underneath this and get to the base of this and then turn around and leave. But we'll leave it like this. We'll leave it like this because this is a lot of work here, and we'll just leave it like that. Okay, so note we have 2 orders in, and the time now is outside of the kill zone time. So this is just a structured drill, which a lot of times they could get messed up because the price is doing time distortion, consolidation, and such. So possibility it may not come up and trip this. So if price does get here. If price does get down here and trip this, this will be eliminated. Like it will be order that's removed. Well, of course, I'm not in front of the charts now, and all that. There's no alerts or anything. So just note that that's what's happening. If price doesn't trip this, come straight down to here. Then this tray here will be eliminated. All right. That's it. Now I'm going to hit stop and actually I'm running out of space because I didn't do the other project yet. So I'm going to upload this as a before, and then I will come back and after the fact, do it after the fact, not give you a video of watching you make it move, because I need more space. Okay, so all right, that's it for now.